we've lost control of the prices here completely. And using futures and forwards as a means of controlling prices, that's yesterday's story now. Price control for silver is actually in China's hands now. And they seem to be quite happy to see the price rise. It would be quite easy for China to turn around and say, right, we're going to stuff some silver into the SGE vaults and make it all look nice, tickety-boo, take the steam out of it and all the rest of it. They show no signs of doing it, which I think gives us a message as well. It raises the question, what is China's official policy on silver? We know that they came in with new regulations, export controls. They allowed something like 40 organizations to export silver, but basically behind that, there is, if you like, the intent to have a firmer control over the export of silver from China. I mean, what I do know is that the people who are trying to stack silver in size, there's none available. And you go to the refineries, and they say, sorry, we haven't got any. We're too busy doing gold. If you want gold, go and join the queue. You could probably get some gold, but silver, forget it. That's just, there's none, full stop.
Yeah, and silver is currently trading at $75 spot. Good luck trying to get $75 spot anywhere. Trying to find $75 spot at any dealership or from anyone at this point. Yeah. So you're going to be looking at premiums, massive premiums.
The only thing I would say is that if this chap has gone short, then he's got to buy it back. And then what price? There's no physical around at all. Meaningfully. The only thing you can do is rush out, buy futures and stand for delivery, or go into London and buy a forward contract and insist on delivery. There isn't any meaningful quantities of silver around. So if you get someone chucking out billions in paper, it's just going to lead to a squeeze later, because there is not. If you're going to go short of something like that, then it only works if there are an awful lot of people long and you can shake the trees and get these punters out and force them to close. That's the only way in which a short really works. Unless you're talking about investing in a company which goes bust. You've got some inside information. That's not what we're talking about. We're talking about a situation that requires people on the other side of the transaction to sell after you so that you can retrieve your position. And if you're going to go and sell a huge quantity of futures or sell forward, huge amounts, whatever, then in the absence of that cover, you're going to get squeezed on the way out. And this chap, apparently he made a fortune or something in gold. I must admit, I haven't really got to grips with the story, but
he made about $3 billion in betting long on gold since 2022.
China just showed its hand. They control the global silver price now, and they're letting it rise. That crashed at $75. That was a Chinese billionaire's short attack. But it's a trap. There's no physical silver left to cover it, so a historic squeeze is coming. China stopped propping up the market because their goal might be a domestic silver standard, targeting a gold-silver ratio of 15-1. That means silver prices could rocket into the hundreds.
Yeah. It's fascinating. If you look at the open interest on COMEX in silver, it's pretty low, which confirms that the punters are just not in it, And I think this shakeout that we've had really from the end of the February contract, really the consequence is that there is a platform, I think, for the silver price to go considerably higher than it might have done otherwise on this run. It looks good to me. But of course, you've got to have a bit of nerves because it's quite volatile. But there we are. This is why I always tell people, for goodness sake, don't try and double guess it, because there are people in there far larger than you who will whipsaw you. Thing to do is just stack. Don't worry. Just stack and don't worry. The question then arises, what are they going to do in the domestic market? Now, fortunately for China and also India, incidentally, both those nations have exchange controls. So they can actually come up with a different answer for the domestic market, domestic yuan, with the international. Now, my assumption is that central banks are extremely jealous of their gold reserves. They want to hold on to them. So they don't want their people, the great unwashed, taking gold out of the central bank, which, I've got an argument which says that they should actually just go on a gold standard full stop. But I don't think that's the way they're thinking. But I do think that they could easily, with the gold they've got and the silver they've got, I'm talking about China rather than India now, they could easily at some stage fix a relationship between gold and silver so that the domestic yuan is on the silver standard while the international yuan is on the gold standard. Now, if that's the case, you've got to ask yourself, well, first of all, what price is gold going to be? Well, say in dollars rather than yuan, to get a rough idea. And the second question is, what is the ratio going to be that the Chinese will fix it? And I think whichever way you look at it, you come up with a far, far higher price for silver. And I think the other thing, Danny, is that, bear in mind that there's something like a 30% savings rate in household savings rate in China. And that's throwing out, $5-6 trillion equivalent going into investment, and property market, dead. Stock market, well, it's been sort of reasonable, I suppose, but it's not everybody's flavor. So what's happened is that the majority of these savings have just gone into deposit accounts, which the banks are being quite constructive in terms of, let's, instead of paying you very little for 1 year, why don't we make it 3 years and we can up the interest rates? But the People's Bank of China has been cutting interest rates. And the major banks, what do? They offer a gold accumulation account alongside your deposit account. So savers can go and literally just put in 500 yuan a month, if you like, or a lesser amount, into a gold accumulation account. And we're talking about, in a year, we're talking about a portion, and a goodly portion, of about $5 trillion. So, the other aspect of this is I think that when it comes to actually, a Chinese individual actually going and buying gold as opposed to running a gold accumulation account, they probably look at gold and think, well, gold is, I haven't worked out what the price is in yuan, but, let's say it's $5,000 or whatever. But silver, on the other hand, is $100. I can afford silver a lot more than I can afford gold. It's so here again, you can see that Chinese individuals and also Indian individuals are going to go, and I think already are going for silver in quite a big way. The point about it is that in Asia, silver has more recently been physical money in everybody's experience, whereas in America and in Europe, we see it as small change. It's no more than small change for us. But in Asia, where Maria Theresa dollars have been circulating in the Middle East, I remember seeing them back in the 70s when I was in the Middle East. And then if you go to China, they were on the silver standard until 1935. And India, they collect silver as, they hoard silver just the same as they hoard gold. And if they can't afford gold, they hoard silver. So you can see that silver demand in Asia is really going off the charts. There is no liquidity in it anywhere. Most silver actually is a byproduct of other metal ores. China imports copper ore, lead ore, zinc ore, nickel ore, whatever, in which there is silver content. So not only are they the second largest miner by mining nation for silver next to Mexico, but they import all, most of Mexico's silver to refine there anyway, plus all the stuff from the ores. They control the market, full stop. The idea that silver's sort of got a control over rare earths and all the rest of it, well, excuse me, they've also got it over silver. So yeah, I mean, dead right. Well, I think you have to look at it in the context of the timing of it. I mean, by Friday evening, in China's time, if you like, everybody had gone home. They'd closed. They had actually started closing a few positions ahead of the weekend, which any speculator is sensible to do. And that then left the market, if you like, in the hands of London and also COMEX. And basically, once they managed to start shifting the price downwards, there were no buyers. It was an offered-only market. So you had a vacuum under the price, and they could push it to anywhere they wanted. And all this was facilitated by China's absence over the week, with their weekend starting early, and at the same time, the end of the February contract. So that was the basis of it. And that's why it was so violent. And this is against a background where all the major banks are now saying, we expect gold to go to $6,000 or whatever by the end of this year. So in other words, the banks are looking to buy. And I think that is part of the explanation as to what has happened. Shake the trees, try and get the price down, then we can buy some. And I'm convinced that was a lot of the logic that we've seen in both gold and silver. I mean, if I'm right about that, and I've got no evidence that I am right, I'm just purely speculating, then China would probably, sort of reckon that the gold-silver ratio should be in the region of 15. That's where it was before.
15.
I understand also that the Swiss refiners are only doing kilo bars, and I don't know whether they're doing LBMA bars, but I mean the smaller stuff. They can't touch it because, I mean, the pressure to refine is so great on them. They're not doing small units. This is really the topic which everybody is interested in. And I think the one thing I would say is that nothing has changed. The fundamental situation for the currency, for the dollar, is looking as bad as it ever did, and it is deteriorating. And the measure of that, at the end of the day, is the price of gold. And people getting out of dollars to get into base metals, silver, platinum, copper, whatever. We're seeing that. That is a trend which has now started very, very definitely. So this shakeout, it doesn't change anything at all. And I think the people who will come through this are basically stackers who just take, if you like, a stoical view of the whole thing. Traders might make one trade and do well, like our Chinese billionaire, but my God, sooner or later they'll lose the lot. And they won't be in when it really matters, which is probably the most important thing.
And so doesn't this incentivize? So he made the point that this would incentivize the U.S. government to actually want to see a higher silver price to incentivize refining of silver into the borders of the United States. What do you think of that? Well,
I think that the United States has got itself into a bit of a problem here because it's suddenly woken up to the fact that it has no control over rare earths and important critical minerals like silver. I mean, I saw on X, I don't know if this is true, but Vance is calling a meeting of 50 nations to try and set a floor on the price of critical minerals. I mean, it didn't make much sense to me, quite frankly. I mean, you set a floor on the price. I mean, yeah. Well, so what do? You say it's bid only here. I mean, it's just complete nonsense. The report was nonsense. I don't know what Vance was actually doing, if he was doing anything. But there's no doubt about it. We're talking about a problem which America, I'm sure, is considering how to fix it. But it's going to take time. I mean, you can't suddenly set up a refinery for stuff in volume. It is going to take time. So, but what we're talking about is a squeeze in the market, which is now. And we're talking about the demise of the paper currency system. as the means of controlling the value of physical. That, I think, is coming to an end. And if I'm right in that, then you're talking about at most a year, probably months, before the sort of derivative situation, if you like, suddenly either implodes or goes away. Open interest goes down towards zero, whatever, however you like to put it.